Morning everyone, welcome to Ainsley News, Tuesday the 23rd of November. Big question today, are you buying the dip? The Bitcoin price tumbled this week from a high of $66,281 to a low of $55,705, that's US of course, rattling a previously quiet and bullish run-in price action. While price stays pinned below new highs and sentiment remains scattered, Bitcoin stakeholders are actively adjusting to new market information. This has shown up as a recent shifting of coin distribution amongst holders. There have been three primary on-chain factors that are influencing the price right now. Number one, the sharp move lower in price, obviously, the aftermath of overhead and unprofitability supply associated with it, and holders' spending behaviour in response to volatility. Number two, the big picture market trend which remains in play, which will aim to provide context on where things stand and considerations moving forward. Point three, short-term holders and their active role in the market this week and in aggregate. This last week, realised profits have been increasing and elevating since reaching 60,000 plus. Realised losses have also been flat for weeks, a natural byproduct of upwards trending price action. As a function of these two dynamics, the realised cap has broken to new highs, established a higher plateau for the network-wide cost basis. Generally speaking, spikes in on-chain profit-taking during bullish impulses are to be expected as the price climbs to new highs, and are typical for any bull market. As the realization of profits increase, so does the probability of establishing a macro top. So an increase in realized profits and realized cap generally indicates that, another point here, increased realization of profits is an estimate of sell pressure, which needs to be absorbed by an increasing inflow of demand to maintain sideways or upwards price momentum. The buyers of these coins, i.e. short-term holders, have an elevated cost basis, making them more sensitive to shorter-term prices or movement in price. The combination of these factors can cause a stall in market momentum and establish a local top. One tool to identify the shift in momentum is the 28-day market realized gradient. Before the price drop this week, the 28-day market realized gradient displayed fading momentum with a sideways price. This same signature occurred before the steep price drop in May and the initial rejection from 50,000 in September. As price made higher highs, the momentum behind each one was declining, creating a bearish divergence. Short-term holders, or STH, are most responsive to price action due to a combination of having a higher relative cost basis, a higher time preference, and potentially a lower degree of conviction in the asset itself. This week's price action was no exception, as short-term holders played a role in setting both the highs and also the lows. STH, or SOPR, spiked to 1.1 near the highs of the week, a historical high value and one that is associated with large amounts of profit-taking. The STH SOPR dipped below 1 near the lows of the week, a value that has historically bounced price during bull runs as short-term holders' cost bases get tested and top buyers capitulate. STH SOPR remained below 1 for an extended period, which would be a signal to market participants to take caution and increase the probabilities of an extended downside. STH SOPR values on the macro scale remain relatively flat compared to the early 2021 price run-up, and possibly signaling that the market hasn't become overly saturated with profit-taking yet. This is a more constructive medium-term observation. This trend of the long-term holder, or hodling, can also be seen in the supply dynamics. The total supply held by STHs can only increase in three instances. 1, when new coins are being mined, which have 0 coin day accumulated. 2, when coins are being withdrawn from exchanges. Or 3, when long-term holders spend their holdings. Got a few charts in this news today, so make sure you do jump over to ainsleyBullion.com.au to check them out. We're going to show charts that show the total supply held by short-term holders is at multi-year lows, or less than 3 million BTC collectively, which means long-term holder supply is at a multi-year high by contrast. Low short-term holder supply is typical at the end of bear markets and in early bull markets, usually following long periods of accumulation. Seeing short-term holding supply this low whilst price is near all-time high is a relatively unique case. A final bit of insight was offered by analyst and pseudonymous Twitter user TechDev, who posted the following charts we're also showing you online, comparing the 2017 price action for Bitcoin with the current market. And they look very similar. According to TechDev, the current correction is following 2017's mid-November to near perfection, with the only minor difference being a break at the 50-day simple moving average. And that's it. So it's still looking positive for this ongoing bull run for Bitcoin. And that's news it. Jump over to ainsleywealth.com.au for all things cryptocurrency. You can buy, sell, or swap through Ainsley Wealth. So jump over there if you can. ainsleyBullion.com.au to buy all things physical, gold, silver, and platinum, and goldsilverstandard.com, our own crypto built and backed by Ainsley. Catch you tomorrow for more news.